Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 13th edition of Market Outlook. So, first thing to note is our risk off / risk on indicators still sitting at 0. So, not a good sign for the overall market. Let's get into some details. I'm going to cover our real motion indicators and what they were showing earlier over the last couple of weeks. So, first thing, let's take a look at our first page here in Big View, and that first page is looking at all the key indices. Now, what we have included in here is our real motion indicator, and as you can see, look at the SPY here, right? You had a high in June, another high here as well in July and even August, but as you see, our real motion indicators could never gain some real strength. And even as we were sitting basically at highs, we had started to deteriorate. You've got a similar situation, even more pronounced in a way, with the NASDAQ 100. So taking a look, you can see here, right, back in mid to early June, our indicator here on real motion is showing some pretty good strength, where the 200-day of real motion well above the 50 and the actual numbers really pretty high. Now, what's happened here, right? Fast forward a month to a month and a half later, new highs, right? And what's happening with momentum? Losing steam, right? Can't match the highs from back in June, and we start deteriorating and moving down below the 50-day moving average well before dropping below the 50 in price. Now, the real big tell, of course, was IWM. Had a failure in price right at the new highs and the upper channel line. And as you can see, right, the highs here continually failing on our real motion indicator and actually going into a bear phase and hitting really the lowest levels it had been in quite some time, as we're sitting just at or around the 50-day moving average. However, momentum, our real motion indicators, much worse. So all of this points to failing momentum. Momentum precedes price. That's the premise of the real motion indicators and the power of it. So the other thing to note is on the weekly charts. One thing that I've been pointing out for quite some time is that the momentum on the S&P has not been able to regain its levels going back to mid to this late summer of 2015. So we were able to, still gain some strength, but we're really been cautious or certainly watching negative potential price action, which would confirm this longer-term trend of failing momentum as well. Now, the other thing is just this week, you can see on a weekly chart, right, by the end of the week, we broke down, and this whole sort of saucer pattern in IWM on the weekly charts definitely broke down. So important breakdowns here across the board. Let's take a look at some other things that are happening as well. So in terms of that risk on, risk off, you can see here, this is SPY versus utilities, right? And this is definitely a very important test of intermarket relationships. Utilities, obviously a safe haven when the S&P underperforms, when that red goes under the black and under that blue, that's a longer term indication. And as you can see, over the last couple of weeks, we really broke down here, right? SPY underperforming utilities on a ratio basis and getting much weaker as well. Our other key market intermarket relationships also weakened well ahead of the market sell-off, which is sort of interesting. It's almost as if the indicators knew that the tweet storm that really set off this sell-off was about to happen. So as you can see, SPY versus bonds definitely losing steam. Bonds definitely a safe haven, moving up relative to the S&P. More importantly, high yield debt also relative to bonds lost a lot of steam and actually was one of the first to break down. The other thing is gold, right? Definitely gaining relative to the S&P. And also gold gaining against an important commodity that's an indicative of the housing business, and that failing as well. Hence, our risk-off indicators, or excuse me, risk-on indicators, still risk-off. And of course, last week, we gave out that warning that things had definitely deteriorated. And you can see the migration, right? A month ago, we were all positive. A week ago already, we had turned negative. We're still there, and actually even more so than before. Now, let's take a look at sectors. In terms of sectors, one thing you can see, and I wanted to highlight as well, I mentioned it in the commentary, is two things. Utilities, right, only down 0.1%, right, good relative performance. The other thing to note, consumer staples. That is definitely a move into a more conservative play. That was the only sector up on the week, up 0.2%. Now, we don't have gold in here or gold miners. That's not a sector. It's really a special group, but you can see, we'll get into that in a moment. So as you can see, as the market has sold off, the movement into safe havens definitely picking up. The other thing to note in terms of 6-month returns, transportation now has, over the last 6 months, a negative return, so further degradation in the overall sector performance. Okay, let's take a look at some market hotspots and see what that's telling us as well. So the first thing to note is this monster move in volatility. Now, on an absolute level, volatility is still relatively cheap, but you can't argue with the type of move that's happened here. So as you can see, up 20, almost 22% for the 5-day period. That's a really strong move. We ended up closing at 1366. So obviously, also what happened on Friday was interesting because the market sort of stabilized on Friday. The Dow basically flat, IWM flat, the spiders basically flat, and the Qs were up 0.8%. So you had a pretty nice move back up, but even with that, volatility blew out towards the close, and nervousness is definitely seeping into the market as geopolitical tensions rise. So the other thing to note, this is a great page here, by the way, you can use this every day, is that gold miners, right, up 3.6% in our discretionary portfolio. We definitely moved into that. Mish's market minute daily advantage product sort of highlighted that as well. So not surprising, Korea sitting on the border with North Korea had a nasty 1-week drop. The other thing to note, regional banks dropped as well. That's also very sensitive to interest rates, and with interest rates dropping and money flying into safe havens, definitely putting pressure on the regional banks as well. And so there you have it. Gold, volatility, utilities, all getting some good play while the market remains under pressure. Okay, so let's take a look at a couple of other things here as well. In terms of market internals, you can see on the S&P that we definitely, on our up-down volume, definitely took some heat. We dropped beneath our 50% line, which is that black. You did the same thing with the McClellan oscillator and the same thing with advanced declines. So you're starting to approach the beginning of oversold conditions, but believe me, they can get a lot more oversold. I wouldn't be surprised to see a little bit of a bounce and then potentially a failure or just a complete further washout here on the downside. But clearly under pressure, as you can see, what we have here is a close under the 50-day moving average with an inside day pattern. So a low or a breakdown beneath the low of Thursday would definitely mean more pressure for this and a potential test, certainly, of the 200-day moving average, which comes in somewhere around the 234 level. So, that's a pretty decent sized drop, which could certainly happen. Now, of course, we could find some support at a little bit higher levels as well, but that's really where I expect a bounce if, in fact, we don't find some more support in the current levels. Okay, so now let's take a look at new highs, new lows. I sort of looked at that last week, and I had noted that the new highs and new lows were definitely starting to deteriorate. And what's interesting here, you can see both moving averages of the new high, new low ratio accelerating to the downside. Not a good sign. And as you can see down in here, this is some of the worst levels we've had in quite some time, even going back to the later part of 2016. So definitely more room on the downside with this. And as you can see, the absolute number definitely hitting higher levels. So this deterioration also not a positive sign. Let's take a look at a couple of other things here. If we go to our world view, let's take a look at gold and see what I'm talking about in terms of momentum. So one of the things that really gave us a nice lead on what was happening to the market, and in fact, one of our concerns is, of course, how gold is acting relative to the S&P. And so over here, we've got our triple play indicator, and you can see gold started to already move up in July, mid-July, relative to the S&P. And even more important is take a look. Even on this sell-off down here, we found magical support at our 200-day of real motion. In addition, as you can see, our 50-day of real motion moved above the 200 and has been staying there. And now if you look at the absolute momentum level, gold is the strongest it's been in quite some time and attacking this important resistance level. Now, you've got a similar situation on the weeklies. As you can see, on a longer term basis, what's interesting is gold potentially is just getting started, right? Because momentum is strong. You can see our 50-week versus the 200-week of real motion, or our momentum indicators, very strong. That's a lot different than the underlying price action. So considering the price action is starting to sort of coil, you got a potential triple top that gets taken out that could really power a move to the upside. And so momentum preceding price and our triple play, which looks at relative performance, definitely basing out. This is some of the lowest relative valuation of gold versus the S&P in recent history. And so you can see we're sort of bottoming out. So plenty of room for gold to move up, considering the amount of liquidity sloshing around. This is a pretty positive sign. So there you have it in gold. It'll be interesting to see what plays out in oil as well. And as you can see, potential bottoming action here, not quite as strong on the weekly basis, or not even close to strong as gold, right? Gold, you can see 50-week over the 200. Not the case here in oil, but we're certainly starting to stabilize and turn up a little bit. And what we really want to see is price action above our 50-week moving average in price, and that's sitting just above the market. So there you have some really good indications about real motion. And if we take one final look here, let's take a look at emerging markets as well. So here you have the overall picture in emerging markets. You can see it's been really pretty strong. It did get hit along with all of the global indices, but in essence, right, emerging markets right here versus the S&P, one thing that's different, you can see as we're making highs here, we're sort of holding up pretty well, making new highs. Certainly this high in here, and now this high in here, your real motion indicators are indicating pretty good strength. The sell-off is sort of in harmony with the overall price action and momentum. So we're still overall pretty strong across the board. And in terms of emerging versus established markets, can't really argue. We've been basing out and gaining strength for many months now. You can even say going back almost a year that emerging markets are definitely gaining strength. That is commodity based, so that is just a bigger trend to stay on top of. All right, I hope this helps. Let's take a look at one last thing. Looking at market sentiment, you can see in terms of the VIX that you had a long-term trend line in this particular chart as denoted here, right? And on Friday, by the end of this week, on Friday, we broke out well above our 200-day moving average of the VIX and the 50 and are attacking this upper trend line. Now, with that, our momentum indicators, which I'll show you in a second, have been signaling that the next rally is going to be a lot stronger than the prior ones that pretty much failed virtually on every attempt to break out. So let me bring up a chart on VXX and momentum, and you can see how we got a big heads up in terms of what could happen here, and hence that was part of our overall view that we presented last week. So here's a chart on VXX. This is long volatility. There's tremendous tracking errors, so there is this steady downward bias. But even with that, for short-term trading, this is really great stuff. But look, all the way down for several years, our real motion, right, our momentum was continuing to drop, right? And as you can see, starting in May, the momentum, our real motion, started to improve. So despite this down move in price and the down move in our longer-term moving average, there's your 200, there's your 50. Look at this divergence. What this was telling me that one of these breakouts, right, and an important move certainly that sustains above the 50-day moving average, right? You had an attempt and then it failed. You had a couple attempts in here, couldn't hold. This time, different picture completely. Look, here's your 6-month calendar range, 100-day moving average. We're sitting right on it. But more importantly, with this, we're seeing that even if you get a sell-off, in terms of momentum, we've definitely shifted. And this is what our real motion indicators are picking up. So should we even get a sell-off, somewhere around the 12 level could be a real good buying opportunity. And certainly with what's happening right now, with all the back and forth between North Korea, China, the United States, and Venezuela, there's lots of geopolitical risk. So what you have in here is a potential for a further rise and maybe even up to the 18 or 20 level as well. So you're definitely looking for potential increased volatility. Is it possible that we can sort of stabilize here, get a pop off that 200-day moving average, sort of in the IWM, and off of the or around the 50-day moving average in the other indices? Yes. However, you can definitely see that it's falling into support both on potential price and, more importantly, for the first time in a long time, a positive momentum setup. All right. Hope this helps. See you next week, and bye for now.